And Christian, we talked about how the building a recession risk, we're feeling that effect across markets here. Where are you on that debate right now?
Yeah, let's look a little bit at history. I think if you look at the so-called track record of the Fed when hiking rates, I think it's not that they often get a soft landing. So I think in many, many more cases, there was eventually a recession coming up. I think if I'm not wrong, only at the beginning of the 80s and 90s, they managed twice to get a soft landing. So I think they're quicker and the higher they need to hike, the higher the probability of a recession. Is that this year or next year? I think markets are clearly looking into probably some this year because they seem to price at least a mild recession right now.
So do you think that the markets have found a bottom after what was a crazy week last week? You have the likes of Morgan Stanley, SocGen Loan. You got to see the S&P at least hit 3,200, 3,000 in order to really fully reflect this economic slowdown we're about to see. What's your view on that?
Yeah, we also looked into that, and from our point of view, you can say the average recession, if there's one, I think it's not a done deal, but if there's one, is say 28 to 30% downside. We are now at, after yesterday's positive move, at minus 20. But if you deduct 30%, you would end up at 3,350 around this area. And we would rather, as we are underweight equities right now, we would rather say if we go there, we'd rather buy into that and close the gap to a neutral position. From our point of view, because I would say even if there's a recession, it might not be a long-lasting one. So I'd rather say we are getting there to a lower level. We rather would use it as an opportunity.
And from that neutral to from that underweight to neutral position, is China sort of where you're kind of building up your exposure now? And do you think the mainland markets are the only refuge against all these hawkish central banks?
Yeah, we would say China looks interesting from our point of view, and we are coming from a, say, mid to long-term perspective. So you could say maybe Asia and especially China was first into the downside. Now other markets have been following quite substantially as well. But if you think at potential growth rates, China looks quite interesting to us. And I'm quite sure that in 3-4 years' time, we would say, well, there was an opportunity in the market when we had all the discussion about inflation, all the discussion about recession. And we do expect China in the second half of this year to put in more stimulus measures. They can certainly afford this. And from that perspective, we think it's rather an opportunity. And yes, it would be one area where we would build to a more neutral position in equities. You're right.
It's been interesting because you guys have a pretty, I guess, out of consensus growth forecast for China, 4.5%. What gives you the confidence that this recovery is more of a V-shaped one and maybe similar to what we saw back in 2020? Because most seem to think that this is going to be a pretty choppy sort of rebound in the economy.
Yeah, I have to say, first of all, we were really below consensus on growth, so we have quite low forecast for quite some time. And now we think if you look at the next 1-2 years, we could go back to more potential growth rates. So it's 4.5 and maybe 4.3 area. And as I said, that's probably because there is stimulus possible, which certainly should help the economy. And from that perspective, from a more bearish view on the growth, which I think has proven to be right, we are now moving to an also more neutral position on growth where the potential growth rate could be.
You know, I'm wondering in terms of just outperformance, China obviously is one to watch out for the second half, but if you take a year-to-date performance across assets, and you're seeing basically energy, oil at the top, you have the dollar, and as you go down, it's like gold, and then S&P is very much at the bottom. What do you look at in terms of assets now? How do you ride the rest of the year?
So from our point of view, we shouldn't forget, I think we had a very tough start in markets in the bond side as well. And if I'm not wrong, I think it was one of the worst starts since more than 100 years, actually, if you look at the first half on bonds.
Wow.
So I think there's more income now to the fixed income side. And that's something which I think is also interesting. So we have been saying avoid bonds, avoid government bonds. But I think now if you look some short duration bonds, they could be quite interesting. And I would say we will see a shift, maybe not completely off of equities because, as I said, right, we think there's opportunities coming up as well. But I would say looking at the bond side could be very interesting for the second half after this, like I would say, horrible start of the bond market into 2022.
And commodities, you're saying, could stay supported in the near term. Does the China demand picture, I'm certainly giving you're optimistic on that, does that help support that picture too?
Yeah, from our point of view, the supply chain issues are not going very quickly, unfortunately, due to COVID policy in China, but also to the Russian-Ukraine war. And from that perspective, I would say, as long as we see that supply chain issues, unfortunately, we will see higher prices, especially in the agribusiness and the soft commodities. We don't want to trade on this because we want to push prices up, but I think especially fertilizers, for example, are produced a lot in Russia-Ukraine area, so it is expected that we get less over the next year, I would say, as we don't expect a quick solution to that war. And from that perspective, I think there's more price upside, which could cause crisis as well. And from that perspective, that's something to watch. That also drives inflation, of course. But here we see some upside. I wouldn't be optimistic for the whole area because we see some, we know this peak cycle as well, right? We see some massive production coming up. And if supply chain issues go away, there could also be price drops. But I think for the time being, they stay.